Hello, everyone. Thank you for joining. Welcome to CADA Lunch and Learn. Thanks for joining today's lunch debate. We have two speakers today, Dan and Sarah.
Hello.
Hi. Just a little housekeeping. We're all muted to avoid any background noise. I would encourage all of you to put your questions into the chat and we'll run through them later. Today, we're discussing inflation and what's next. What is this going to mean for operators and suppliers? I'm going to kick off by asking the first question. Realistically, is it all about money now, or is there anything more?
Okay, I'll start with that one. Thank you, Meha. I guess we know we've only got 15 minutes to talk about this, so we're not going to try and cover everything. We're certainly not going to try and cover the causes, but what we are going to look at is trying to shine a little bit of light on what's happening right now and what we might see over the next kind of 6 to 12 months in terms of trends emerging and what that might mean for hospitality and retail sectors. Basically, all the sectors that we work with and all the sectors that have already had a terrible 2 years through COVID. And everyone thought they were coming out and breathing a sigh of relief, and suddenly there's this pressure on all of our customers and all of us as consumers. And what does that mean? So is it all about cost? Is it all about price? Is it all about value? I think, Meha, really fundamentally at the moment it is, whether it is shoppers who are completely price driven because they need to be, because they have no choice, or whether it's brands that need to think very carefully about how they're expressing their value proposition to customers and how they can tweak that or develop it over the coming months and maybe year to ensure that they're kind of retaining loyalty, growing loyalty, minimizing the impact. It's very much going to be financially focused. And I think to kick off, there's a really good illustration if we're looking at grocery, which is that we've already seen the big brand owners, Unilever, Procter & Gamble, Reckitt, Nestle, have all raised their prices in Q1 of this year and are likely to do the same later in the year as well, because they're dealing with raw material costs and they've taken the decision to, at least in some degree, protect their margins. And what that does straight away is, for those brands with strong own label offerings, is it offers them an opportunity to create a clear differential from a price point of view that will be greater than branded products versus own label have been previously, and also to create loyalty to those own label brands and those ranges that have been developed. And there's been quite a lot of work done on own label in the last 5 or 10 years, certainly if we're thinking about the UK from a point of view of needing to defend against the discounters and needing to make sure you've got credible, value-driven ranges in store. And those ranges may well generate positive responses from customers.
And it's an interesting point, Dan, that you make about the own label and as an opportunity to fight back against the discounters, because what we've also seen is the discounters noticing the value of own label. So the most obvious one being the Aldi Mamia range, which started with the nappies and has now expanded out into a huge range of baby and toddler related goods, and is genuinely challenging Pampers, which is going to be the market leader. And I remember when I was in the market for nappies, Huggies left the UK because they couldn't stand up to the challenge of Pampers. It just wasn't worth it, so they exited the UK. But the Mamia range is now probably, I don't know what the numbers are, but it's an example of the discounters being able to say, well, actually, we can do own label too. We can expand beyond our discounting remit. So I think that the fight will be taken back to the larger supermarkets. Yes, they can take advantage of own label as an opportunity, but don't expect it necessarily to be an easy fight.
No, and I think you what we are trying to do is try and find some positive indicators here of how brands can behave and how brands can react or adapt to the conditions that we're trading through at the moment. And I think that Mamia is a really good example, because it shows how an own label brand can actually come to compete and stand along its own, along with the brand owned offers, and that there is a real strength and there is trust. We have to remember that all successful supermarket brands have got a long history of building up trust with their consumers, and this is an opportunity to continue to build that trust, to build that reliability. Sarah, you were saying the other day about Asda in the UK, who have made some price pledges early on in to hold
drops and locks, as it's called. So yeah, holding these prices until the end of the year. So what they're saying to consumers and to all of us is, you don't have to keep looking. We know it's exhausting to keep checking, to keep seeing who's got the cheapest of X, Y, Z item. You can rely on us. We are going to hold this price for at least until the end of this year, to encourage people really to carry on shopping with them, because we might all be looking for better prices, but we haven't all magically got more time to do it. So I think in a way it's quite a canny move. Obviously it's not on the entire range. It's on a number of key products. So it has, limited application.
But what it is doing is it is reinforcing a value or a price commitment to customers that is completely transparent, and it doesn't require any effort to understand. And I think that's an important part of, from a grocery point of view, that's an important part of what the discounters have brought to the markets where they're performing strongly in, which is that they have a very easy to understand message, and they've focused on value, for the last decade very strongly. But that value is not purely price driven. They also make sure that value includes quality and freshness and province. So they've done a very good job with their laser-like focus on what they do, and that's the challenge for other grocers really, is if the majority of consumers are looking for places to save money, and that involves trading down or trading across, either from one brand to another, or from a brand to own label, or from one supermarket to another grocer that has a better price reputation. That's the challenge, is how do you keep some of those customers? How do you make sure you've got the right ranges?
No, exactly. Interestingly, Aldi and Lidl haven't actually been, we've noticed this, they haven't been defending their positioning on price particularly. I heard an advert on the radio for Aldi just last night, and the strapline was something like, don't change your lifestyle, change your supermarket. Come to Aldi, you'll save money, and you won't have to compromise so much. You won't necessarily have to give up so much of what you're used to and what you like. Now they are the only ones, Aldi and Lidl are the only ones to have increased sales in the last month. They're up 6% for Aldi, 5.8% for Lidl. And I think that's quite interesting, because it shows that there is still that expenditure out there. There is still that customers have money to spend, but they're choosing where to spend it. And it won't just all be customers who absolutely have to save who are switching to Aldi and Lidl. There's been this general mindset shift that we were looking at some IGD research recently that shows that people in general, including people who haven't really necessarily felt the pinch yet, there's been this general mindset shift of everyone is looking to save in ways that are palatable to them and that are acceptable to them and that fit with their lifestyle. So that's where I think the discounters have another big opportunity to really continue to grow market share. I mean, Aldi's now at 8.8% of UK market share, according to the most recent Kantar. They're catching up with Morrison's, the big four. How long is the big four going to remain the big four?
Yeah, and then, without going into it, what that then begins to do is puts Aldi in an interestingly evolving position, in the sense that they like, both Aldi and Lidl like being seen as outsiders. They like being seen as discounters. Yeah. If the next 12 to 18 months they become one of the dominant brands, rather than being the fifth in the UK, we have this kind of rather strange obsession with the four largest and then the discounters separately. Is that then puts them on a different footing, and they potentially have to start fighting more nuanced battles with those other competitors. So that's kind of an aside. But the other point as well is that we've seen across the Atlantic, we've seen Walmart and Target's share prices tumble as a result of nervousness about grocery spending, and they're both, or in fact discretionary spending, not just grocery. And they're both very well run retailers with good heritage, and the stock market traditionally likes them. And so there is clearly a caution that and not unfounded, that retail and hospitality are going to bear the brunt of the recession, either through through the pressure of obviously lower spending as consumers try to spend less or manage their spending, because it's not just, of course, retail products and hospitality products that are going up in price. It's everything else that their household budgets have to pay for, not least, of course, energy. And so there's the pressure there on spend, and that might be depressed. There's also the pressure on margins, because, of course, raw material costs are going up, transportation costs are going up, supply chain issues. All of that is making it very difficult for retailers to look attractive aside from the discounters. So there's a difficult period ahead. I mean, I think that all of the key grocers across Europe are well funded, well structured, and hugely professional. So we'll have plans, but there are also opportunities coming in. We're seeing there's a Swedish online-only discount brand called Matatos, which is planning a UK launch this summer. They were founded about 8 years ago, but they're already in Finland, Denmark, and Germany. And they are doing something which we assume is delivering them a profit, but which is selling discount online, which is what everybody has said is too difficult because the margins are, of course, wafer thin.
Yeah.
And once you put in kind of delivery costs, handling charges, and the extra manpower, and of course the extra fuel required to do it, it's very hard to make that compelling. But what Matatos' buying strategy is actually buying products from other retailers that are close to expiration date or close to sell-by date and selling them on quickly. So it's not a fixed range, it's an opportunistic range, but that may resonate quite well with consumers who have found new and interesting ways to save. And also it resonates with some of the apps that are available at the moment.
Such as the one that Meher uses, Too Good To Go, which I've heard of but never really dived into. Meher said last week she's been using it for a while. It's now become a lot busier. Out of necessity, people are starting to really look into these options. It's almost as if its time has come. That we've all seen the magic bags in the supermarkets. Again, you don't quite know what you're buying, but you're buying some fruit and vegetables for, say, £5, and you're going to turn your hand, whatever that is, and make the best of it. So I suppose that's looking at it from the most positive point of view, less wastage, people perhaps being a bit more creative about what they're eating and starting with fruit and vegetables rather than more expensive items. But we don't want to minimize this or make it sound as if it's anything other than a really difficult time for retailers, for operators, and for shoppers. The one group we haven't really touched on so far is suppliers. What do we think the implications are for suppliers to restaurants, supermarkets?
Well, I think, from a kind of an innovation point of view, from a choice point of view, I think we're likely to see in the short term, we're likely to see less choice because one, we know the supply chain issues anyway, so there's availability issues. But two, also in times of crisis, people tend to focus around the basics because, from a consumer point of view, you've got cost certainty or close to cost certainty as you can get, and also they're the products that are essential that you need. And again, from a supplier point of view and from a retailer point of view, you want to know that you can deliver those basics. So we're not going to see a whole raft of new product launches this year, not only just in terms of physical retail and brands, but also in terms of digital ecosystem that's around that. I think aside from something that's very value driven, as the two examples we've just touched on, we're going to see less innovation around, I wouldn't want to be in the sub 15-minute delivery category for the next 15 or 18 months, because if everyone's looking at how they economize, then paying a premium to get a service delivering something that you don't really need that service for, but just makes your life a bit easier, is one of the first places where people will see they can economize.
Because you're paying for the fee and you're paying the premium for the actual products. So yes, exactly. And I mean, we've seen that with subscriptions, haven't we? I think there's a lot out there about cancelling subscriptions because it's a quick win.
And we also see supplier pressure coming from the retailers as well. And there's a long history of where the responsibility lies for price and how that is shared. One of the things we were talking about Asda in the UK, one of the things that they've also done, as well as guaranteeing, from a positive consumer point of view, as well as guaranteeing prices on certain key items, they've also gone back to their suppliers looking for those supplier terms to be updated so that those supplier terms match the terms that they offer discounters. Now, that seems kind of, if you look at it from a consumer point of view, that might seem relatively equitable in the sense that, okay, well, look, the supermarket are guaranteeing a price for me, so they need the cost certainty about what they're buying it in order to deliver that. And if they're already getting that price elsewhere, or if that supplier is already offering a better price, if you like, elsewhere to another another discount operator, then why can't I get the same price? The issue is not just purely about price, it's also about the equitability of that product. Is product A that's being sold to the discounter exactly the same in terms of cost and standards and quality as the price that's being sold to the mainstream supermarket?
Pack size sometimes differs.
And also the other big point is that actually working for the large supermarkets can be challenging. Negotiating their procurement departments and the responsibilities that you have as a supplier to those supermarkets is often far more onerous than it is working with a discounter, which tend to be smaller, more nimble, easier to deal with.
And pay you faster.
Exactly. And perhaps most importantly, give you a much better cash flow, will maybe pay you in 14 or 21 or 28 days rather than 60 or 70 days.
Exactly.
So, it's tough. It's tough out there for everybody right now. There aren't any easy answers, but aside from looking at ways to innovate, aside from looking at ways where you can continue to provide value through your supply chain.
Amazing. Wow. I feel like we could do a whole other session on this. This is amazing. Thank you both. We have some questions for you. So Richard, hi Richard. We have a question from Richard. The economic downturn in 2009 was the last major squeeze on consumers' purses, and out of it we saw lots of innovation, both value engineering products to reduce costs, but also the explosion of street food and the gentrification of low value foods like pork belly and the humble burger. Is there still scope for innovation, or has all the value been squeezed out? That is a great question.
I think a lot of businesses will realise that standing still just isn't an option for the medium, really the immediate, medium or long term. But you have to be willing to take that leap and to understand, really, as a supplier, any supplier needs to be able to show what the value, what the point of that innovation and that investment would be, and have a rock solid business case that really helps to convince, I think. Yes, there's always going to be room for more innovation. It's not going to end at pork belly and the burger. And perhaps it's going to go in completely different directions with alternatives to meat and the use of less meat. We're certainly seeing more of that, to your point. But yeah, it's going to be a case of making the business case for the investment in the innovation rather than standing still, I would say.
Yeah, and I think it's just to go on a kind of slightly more corporate point quickly, is that's actually where a lot of the innovation in own label came from in the larger brands, is because they had to defend against the discounters, and so that 2008-9 crash was what drove that innovation, and what actually might mean that if people now go back to those own label ranges or try them for the first time, they might be pleasantly surprised, because in fact those ranges are the ones that had a lot of money spent on them during development. Yeah. But to talk about it in a slightly broader sense, Richard, and your point about street food and so on, I think there's definitely within hospitality there will be opportunities. If there is a way in which, for example, food waste restaurants can move out of what is quite a niche space where they're working with waste food and finding creative ways to create menus. If there is a way in which that can then, rather than being rather labor intensive, relatively high-end exercise as it currently is, driven by a few innovative chefs, if there are ways in which that becomes an affordable method of delivering a sandwich or a burger based on what would otherwise be vegetable or fruit waste, or a smoothie offer, those things are about taking those principles, finding those products that are otherwise, waste products, and turning them into something that can be saleable, can have a very strong and compelling message in the current climate. So I think, of course, there will be innovation. It's just going to be harder to find it for a while, because fewer people are going to be investing in it in the short term, which is why I think it will come up from the bottom, just as you said, talking about street food.
Yeah. Amazing. Okay. Chris has also shared a message. Hello, Chris. What do you think is or will be the impact in construction? How will this impact the customer experience and the consumer's relationship with that brand? Will retailers focus more with online rather than physical spaces, or change their format strategy, i.e. IKEA?
Interesting.
Well, I think construction, we as we've seen in previous downturns, construction takes a long time to stop. So there are things that will already be being being done that will continue to be done, because you can't turn the project off, because it's on a critical path and it's committed to and it's funded. So, you know, I'm sure that, well, maybe not, you know, maybe Marks and Spencer's would have wished they didn't open their new trial store, their flagship store in Stevenage a month ago, but you know, in a year's time. But, you know, you can't do anything about that. You're on a long-term program and you've got to deliver. Where I think, you know, where I think your point is interesting, Chris, is do you think that will mean there's a slowdown in projects? I don't necessarily think so. Of course, some people feel cautious. Some people will pause their development programs. Because they'll divert their capital into other things if they can do. But I don't necessarily think that it will lead to a further migration online. You know, outside of this, we've seen already online-only brands over the last couple of years, you know, spending more money and realizing that actually there's a benefit to a physical channel, maybe in quite a small way, maybe in a flagship and experience-driven way, rather than
customer acquisition. That's the other thing. Once they get to that certain size, it becomes the most cost-effective way to acquire new customers. So
yeah,
yes.
So I think we'll see construction continue, but we may to Richard's last point, we may see more innovation coming in. We desperately need innovative new retail formats. That does feel like the landscape has been a bit stale for the last couple of years, and already COVID had shocked people into thinking about that. And so I think that we may, you know, there will be formats that are being tested now or that will be coming to market in the next 12 months that will still arrive, because those projects can't be stopped. I think that, you know, and what it's going to be is about brands needing to demonstrate their value through those formats.
Yeah. Amazing. Okay, last question for the last few minutes. Leander has asked, hello Leander, what do you think the impact of the recession will be on independents and small producers?
Well, this is the big challenge, in the sense that we spent a lot of time focusing on the first half of this conversation about large corporate retailers who have huge reach and are, you know, have a cushion to survive and trade through, even if times get difficult, even if you know, the share price is affected. It will be, as a side point, it will be interesting to see what happens to Asda and Morrison's, who are currently owned by private equity and now have a lot more debt against them. You know, it'll be interesting to see how they fare, but, you know, they're not in any danger of going to the wall. I think for independents, where you can't compete on price in the same way, that's not a new situation, in a sense, in that the independent offer is much more about quality, range, service, provenance, whether it's local, whether it's made in store, whether it's made by the same business that's retailing it. You know, there's a much richer story about those products and about the level of service that you get, the quality, the curation. All of those things are what makes independents successful and stand out and makes people choose them. And I think what independents need to do is recognize that we're going through a period where people will make value-driven choices around price and around quality, but that doesn't mean they will stop coming. It might mean that they trade down. It might mean they trade across. It might mean that they spend on a different product. So it's making sure that your ranges have some of those essential products, and that where you can, those products are keenly priced, appropriately priced, but that you're not trying to compete with someone who's a purely commodified retailer. We were talking to one of our clients yesterday who's in that sector, albeit at a large scale, and they were saying exactly the same thing, is that they don't see customer visits dropping. They may see basket sizes changing or the makeup of the baskets evolving, but they've got to be clear with customers where the value is and which products provide that value, and that value means a different thing to everybody.
Well, exactly.
There's not one answer.
It's what Meher's first question was: is it all about price now? Is it? And I think we agreed that to a very large extent, yes, it is. But equally, value means different things to different people. I think for independents with a local focus, they have an advantage because that's something they can drive, and that's products that aren't sold very, very easily, very, very widely. So that's the route. That's an interesting route that they'd be able to explore and look at and possibly maximize the value of.
And also innovation, to Richard's earlier point, you know, the big companies are terrible at innovating, even in times when they want to. It takes a long time and they're very cautious. Small companies have a huge advantage in that they don't have that bureaucracy. They don't have the status quo that's forcing them or trying to prevent risk. You know, it's now is the time for bold ideas, I suppose. You know, that would be one way of looking at it, is that actually this is the time to be really creative and use this as an opportunity to create new points of difference. I know it's kind of scary. It's all scary, but the world is changing. It already changed hugely in the last 2 years. We were talking to our clients through COVID about the need to accelerate change, particularly legacy retailers that were bricks and mortar first, if you like. That you can see the internet coming over the hill and landing, and you know, people like Gymshark, who took a flagship store on Bond Street, they don't need to make any money from that store. As Sarah was saying, those sorts of things are often about customer acquisition and brand experience. So we've all got to, you know, if you're an existing physical retailer, you're already in a place where you need to innovate to stay relevant before this inflationary pressure was brought to bear. So be confident, be bold, come up with some new ideas, try things, do things quickly, and get customer feedback quickly, because you're much closer to your customers as an independent than the large brands ever can.
And we saw a lot of that in COVID, didn't we? We saw a lot of restaurants turning into retail operations and delivering meal delivery on a scale that would never been anticipated, and everyone had always assumed was too difficult and too hard, and is now an important part of their business. Again, not a small one, but Pizza Pilgrims with their pizza in a box, which started as a way to keep connected with customers and get some cash flow, and is now a huge part of their business with someone separate running it. So yeah, trialing things, and a closeness to customers is the other advantage that independents can really rely on.
Amazing. Thank you both. I don't want to keep people longer than our scheduled half hour. Thank you everyone for joining. If you do want to continue discussing this with Sarah and Dan, feel free to contact them on LinkedIn, or you can email us at enquiries@cada.co.uk. And I will be sending out the link to the recording of this, and to hopefully our next one next month. Thank you, everybody.
Thank you all for your questions.
Everyone. Thanks for coming.
Bye.
Bye-bye.
Bye for now.